Scott Nelson, Senior Wealth Manager with Boulay Financial Advisors with your mid-quarter economic and market update. Starting with a look at the U.S. economy. The big economic news of the past couple months is the Federal Reserve's cutting of its federal funds interest rate on two occasions. The first cut in September was 0.5%, and more recently 0.25% in early November. Federal Reserve Chairman Powell, in recent comments, though, noted that the economy was in good shape, making it unlikely that the Fed would cut rates significantly in the near term. Among the economic bright spots indicated by the Fed chairman was the continued strong job market. The unemployment rate came in at 4.1% in October, unchanged from the September level. While the Fed's interest rate cuts signal that inflation is not the concern it was 2 years ago, inflation continues to take its time getting to the Fed's target level of 2%. After 5 months of declines, inflation as measured by the Consumer Price Index rose 0.2% in October to 2.6%. Airline fares, used vehicles, and rental prices saw increases last month, while the prices of apparel, gas, and some food items declined. All in all, lower inflation and the strong job market continue to give consumers the confidence to spend. As a result, the economy grew at a decent 2.8% in the third quarter. Increases in exports and government spending also contributed to that growth. Okay, let's look at the markets next. And looking at the market trends over the first 6 weeks of the fourth quarter, we see that international stocks have lost 7% this quarter, largely because the dollar is up 6%. U.S. bond market slipped nearly 3% as the Fed has indicated it is in no rush to cut interest rates, and U.S. stocks have jumped over 4% immediately after the election, but have given up about 2% of that gain in the past week. A closer look at the stock market shows that the U.S. stock market's up about 2.4% for the quarter and nearly 24% for the year. Large cap stocks have been the primary engine powering that rally, and they're up over 26% for the year per the Morningstar Large Cap Index. Small cap stocks, though, have been outperforming lately, and they are up over 3% for the quarter and 14% for the year, according to the Morningstar Small Cap Index. Both developed and emerging market international stocks are down approximately 7% this quarter, but they are still in positive territory for the year, with developed markets up 5.5% and emerging markets up nearly 8%, according to the Morningstar Developed and Emerging Market Indices, respectively. As noted, the prospect that interest rates will not be moving down significantly in the near future has pushed the overall bond market down just under 3%. Short-term bonds have fared a bit better, giving up 1.39% this quarter, and are still up over 3% for the year. Longer-term bonds, though, are down 6.69% for the quarter and 2.5% for the year, as measured by the Morningstar Core Bond Index that tracks bonds with maturities exceeding 10 years. Overall, government and corporate bonds are both down about 3% for this quarter, but remain in positive territory for the year. Okay, that's your update for the fourth quarter of 2024. As always, if you have any questions about what was covered in this video, reach out to your Boulay Financial Advisor. And to learn more about Boulay, please check out our website or email us at learnmore@boulaygroup.com. Until next time, wishing you a very nice holiday season.